Did you know that Elon Musk, the CEO of Tesla, has sold the company's shares once more? For a variety of reasons, Musk's name is frequently mentioned in the media and on social media platforms, so it's no longer surprising to see him there. Since completing his acquisition of Twitter late last month, don't miss this information. Elon Musk, the CEO of Tesla, sold $3.95 billion worth of Tesla stock. The selling of 19.5 million shares of Tesla stock was widely expected because the CEO of Tesla struck an agreement to purchase Twitter for $44 billion. Since the announcement of his deal to acquire Twitter earlier this year, Musk has sold blocks of Tesla shares, valued at a total of $15.4 billion. The transaction occurred only a few weeks after Tesla revealed third-quarter earnings of $3.3 billion and revenue of $21.45 billion, which missed Wall Street estimates and resulted in a 4% decline for the day. Musk's net worth has decreased by less than $200 billion, despite Tesla's valuation falling by almost 46% this year. Musk acknowledged that he was clearly overpaying for Twitter at the time of the results. Obtain an additional 10 money, create an account, and add any amount to Mumu. This is a special offer to commemorate Mumu's 10th anniversary. Take a look at the following link. Mumu is an excellent stock trading platform with lots of innovative, user-friendly features. Many of you will likely find it really beneficial, particularly if you wish to be more engaged in hands-on investing. For instance, learn when to buy and sell stocks. URL in the following description. Twitter revealed that although Musk purchased the social media platform on October 27, he did not begin selling more Tesla shares until November 4. According to filings with the Securities and Exchange Commission, he also sold blocks of Tesla stock earlier this month. These filings come despite statements from Musk, the company's CEO and the company's largest shareholder, that he was done floating the stock. In April, Musk claimed that no further transactions were planned, and in August, he reiterated that it was crucial to avoid an emergency sale in case he needed to close the Twitter acquisition and struggled to find additional equity par since taking over. Twitter has seen a massive drop in revenue as more advertisers paused spending on the platform. Musk blamed activist groups for pressuring advertisers for the loss of advertising dollars, but it's unclear at this point if the money he raised went towards the purchase of Twitter or to support losses at the company. Notably, Twitter had only $2.7 billion in cash on hand as of June 30th, well before Musk took over and advertisers started to leave. The company lost $270 million in the quarter that ended on June 30th. According to Dan Ives, a tech analyst at Wedbush Securities, Musk's 2 weeks as Twitter's owner have been a complete disaster. The more involved he becomes in Twitter, the riskier the deal gets, Ives said. Essentially, after months of trying to pull out, Elon Musk finally took over the social media site in October. It's unclear how the $44 billion transaction was eventually financed beyond the roughly $13 billion in loan commitments made by Wall Street banks. Now that everything is said and done, what happens next? Well, Twitter is losing money and now faces annual interest payments of nearly $1.2 billion since Musk took over. Major companies have halted their ads on the platform, waiting to see how it evolves under the billionaire's leadership. It looks like Musk is preparing for things to stay bad at Twitter for the next year, according to Gene Munster of Loop Ventures. A number of high-profile individuals pledged to invest about $7 billion, but it's unclear if they followed through on their promises. Following the disclosure of the stock sales, he is getting ready for Twitter to become a money pit. 2 turbulent weeks have passed at the social media company as a result of Elon Musk's drastic cost-cutting and operational overhaul measures. Musk actually let go of half of the staff and later asked others to return, though some employees are unsure if they are still employed there. The deal has also caused some Tesla shareholders to worry that Musk is overstretching himself and may have to sell even more of his stock. Of the $36 billion worth of shares Musk has sold, roughly half have come since he went public with the plan to buy Twitter. Musk's fortune dropped to $179.5 billion from $340 billion at its peak due to Tesla's stock slump, according to data collated by Bloomberg and the Bloomberg Billionaires Index. The richest individual in the world, Elon Musk, currently owns over 135 million Tesla shares. Experts think that this is not the ideal time to sell Tesla shares, which have underperformed this year, losing 46% of their value due to poor sales brought on by supply chain issues. Since the closing of his deal to purchase Twitter, Musk has received an average price for the Tesla shares he has sold of $202.52, a 10% decrease. It is no secret that established automakers like Volkswagen, Ford, and General Motors are becoming more and more competitive in the electric vehicle market, and some investors are worried that Musk will be too preoccupied with his acquisition of Twitter to devote enough time to solving Tesla's issues. This never-ending situation exacerbates Tesla investors. Our fear going into the final days of the deal was that Musk would have to sell more Tesla stock to fund the disastrous Twitter deal, and ultimately those fears came true, which speaks to some of the massive selling pressures on the stock of late. Albatross said that Dan Ives Musk needs to look in the mirror and end this constant merry-go-round of Twitter overhang on the Tesla story. Daniel works at Wedbush for Musk, who has stated several times in the last year that he is finished selling Tesla stock. However, in a scene reminiscent to The Child Who Cried Wolf, Daniel loses more trust with investors and his supporters. The majority of Musk's wealth is associated with Tesla stock. Following the sale of his Tesla holdings, Forbes reported that Musk's personal net worth fell below $200 billion, despite the fact that he is still the richest person in the world, despite having sold 19.5 million shares 7 times this year. Musk still owns 445.6 million shares, according to S&P Global Market Intelligence, making him the largest single owner of the stock and giving him 14.1% ownership in the electric vehicle company he co-founded in 2003. This means that Musk maintains greater financial control over his company than many other tycoons do. Jeff Bezos, the founder of Amazon.com, owns just 9.8% of the company, and Mark Zuckerberg still has a costly 13% stake. Many people think that Elon Musk's sale of Tesla shares this year is a typical stage in a company's development. Large institutions currently own over 42% of Tesla stock, with traditional investment managers making up the majority of these owners. Musk himself only owns 15.6% of the company. The only other significant individual investor is Larry Ellison, the founder of Oracle. The remaining shares, which account for 41% of the company's value, are owned by public investors like state pensions. Activists like D. Shaw are hardly involved in Tesla. In fact, he owns just 0.1% of the stock. Despite this, investors continue to bemoan the fact that Musk is selling even though he may be reducing his stake in the massive ETF. Mutual fund investors are piling up Tesla shares, making Vanguard Group the second largest shareholder. The massive investment organization, which holds the majority of equities, has 204.7 million shares of Tesla, or 6.5% of the company. Of the 5 ETFs that possess the most Tesla shares, 2 are managed by Vanguard. 19.3 million shares are owned by Vanguard SP 500 ETF, and Vanguard's 17.6 million shares are owned by the whole stock market. The 4th largest percentage exposure to Tesla in the ETF is managed by the same investment manager. To meet the requirements of these ETFs, Vanguard Consumer Discretionary ETF allocates about 16% of its portfolio to a single stock. Vanguard has been purchasing Tesla stock at a rapid pace, and as a result, it now owns roughly 58% more than it did 2 years ago. BlackRock, another giant in the ETF market, is the second largest owner, with 166 million shares of the company's stock, or 5.3% of all outstanding shares. After the Spider SP 500 ETF Trust, the Invesco QQQ Trust, and Vanguard, BlackRock's eShares Core SP 500 ETF is the 3rd largest holder of Tesla stock. Although analysts have differing perspectives about Musk's sale of his Tesla shares, BlackRock is actively adding more shares. In 2 years, the number of shares held has increased by roughly 46%. Make sure to subscribe to this channel to receive updates on Tesla stock.